Hello, friends, and welcome to Big T's 3-Minute Market Minder. At the end of 2016, I predicted that 2017 would mark the return of 3% inflation, which is the normalized level of inflation that we've seen for the past several centuries in the American economy and also in Europe. Inflation typically runs at about 3%. However, since 2011, inflation has been incredibly low, so low that pundits have been saying that we'll never see a return of inflation, which of course is ludicrous. Anyway, on the first Friday in January, the jobs numbers came out and showed the highest surge in wage inflation in 8 years, almost 3% in wage inflation growth. Now, why is that important? Wage inflation is always a precursor to broad-based inflation. And the reason being is that when you increase people's wages, they don't save it. They go out and they spend it. And that causes a demand spike, which causes inflation to ripple through the economy. Now, this was proved out on January 18th, which is why I have this news story in front of me here. And it showed that the Consumer Price Index, the CPI, which is what measures the price that we pay for everyday items, showed its biggest increase in 5 years. It came in at 0.3%. Now, I'm not suggesting it'll stay at 0.3% for every single month for this year, but if it did, let's do an annualized look. If it did, it would show that inflation is running at a 3.6% rate. Now, I don't think we're going to see 3.6% inflation. I do think we'll see north of 3%. Last year, we saw inflation come in at 2.1%. That's the biggest increase since 2011. So, friends, the key takeaway here is this. You must be aware that inflation is starting to normalize, and there are certain pockets of the market that just get absolutely hammered when inflation rises. One of them is the bond market. Bonds get crushed as inflation goes up. But there are also areas of the market that do incredibly well when inflation comes back. And one of them I spoke to you about all through last year, and that is gold. Now, I know gold had a really rough end to 2016, but at the end of 2016, I said, look, do not sweat this pullback in gold. It's a buying opportunity. We will see inflation in 2017, and that is exactly what is happening right now. Gold is up almost $100 an ounce since the lows of December of last year, and I think it's just beginning. I think we are going to continue to see higher highs ahead in gold prices. I think bondholders are going to get absolutely killed by this rise in interest rates. So I'm looking forward to bringing you more about this story of normalized inflation as we go through 2017. But for now, take a look at your bond portfolio. If you're holding long-term bonds, either try and hedge the risk or maybe move into shorter term bonds, because long-term bonds like 20, 30-year bonds just get absolutely killed in an inflationary environment. Okay, friends, that is enough out of me. I will catch up with you in the next video, and I want you to always remember, let the game come to you.